Good evening, everybody. Sorry we're running late. Obnovia problems again. Tonight we've got the great privilege of having Mark Chaikin here with us, and I'm going to just introduce him real quick since we're running behind. Mark not only has developed a proven model for finding the best trades. His model is now the standard for a lot of the institutional workstations around the world. So, Mark, welcome to the Candlestick Forum, everybody. I think you're going to get a lot of good information tonight. Welcome, Mark.
Steve, thank you very much, and welcome, everybody. We originally titled tonight's presentation, How to Use Group Strength and Weakness to Find Winners, but given what we saw happening in the market this afternoon, we wanted to broaden out the presentation. So tonight's presentation is 5 keys to outperforming the market, and that means outperforming on the upside and the downside. So in the next hour, you're going to learn the 5 keys to outperforming the market, which you see listed here on the screen. I should note that we put out a bearish market alert at 3:45 this afternoon when it looked as if the S&P 500 was going to close below 2040. So the last of the 5 keys, avoiding landmines that destroy portfolios, is very relevant because we think there's more downside risk now that we've broken the lower support level of 2040 on the S&P 500 on a closing basis. Don't know how deep the correction is going to be, but we're looking at 1980, 2000 as the initial target. This could be that 10% correction that we haven't seen for 4 years. It remains to be seen. But the keys that you're going to learn tonight are going to prepare you for that inevitability. So if you master these 5 keys to profitable investing, you'll be able to achieve profitable trades like the testimonial we just got on July 29th from a new user of Chaikin Analytics who put on a Yelp put position in the first 2 weeks of subscribing to Chaikin and made $17,400 on a $7,000 investment. You'll also be able to achieve and find trades like a recent subscriber who bought puts on Esterline when we made it our bearish stock of the week and made $10,200 on a $1,700 investment. So this is sort of typical of what Chaikin Analytics subscribers who've mastered these 5 steps have been able to accomplish. Recently, experts like Jim Cramer and Bob Lang have been talking about Chaikin Analytics and the Chaikin Power Gauge rating. But individual investors like those of you on the webinar tonight also agree. So we've had testimonials, and these are all very recent. The one I like the best is the gentleman who said, I'm a cheap bastard, but I made $2,260 in a week and a half, covered the cost of my subscription, and Chaikin Analytics is invaluable. So hopefully after this webinar, you'll come away believing that these are tools that you can use. They're very compatible with Candlestick Forum and Steve's T-line and his candlestick analysis. Steve presented to our Chaikin community last night, extraordinarily well received as he always is, and we think there's great synergy, Steve and I, between what Chaikin's doing, which is basically trying to help you find the best stocks for both long and short trades, and combine that with the candlesticks. So in order to really believe and understand what these 5 steps are all about, you've got to understand what the Chaikin Power Gauge rating is all about. So Chaikin Power Gauge rating came about because I wanted to create a quantitative model that analyzed the fundamentals. Because even though most of you know me as a technical analyst who created Chaikin Money Flow and the Chaikin Oscillator, Chaikin Power Gauge rating does fundamental analysis, 85% fundamental. It does the heavy lifting for you. 20 factors that I distilled down from 200 in a 1-year research project, grouped into 4 components. And the reason the Chaikin Power Gauge rating has worked for the last 4.5 years since we released it to the public in January of 2011 is because it's based on my experience working with institutional investors over a 25-year period, and make no bones about it, institutional investors, although they occasionally look at charts, particularly the 200-day average and the 50-day average, are driven by fundamentals. So these fundamental factors are what institutional investors look at all day, every day. Now, the bedrock are the financial metrics, which is what a Warren Buffett would look at, 35% of the model. Earnings, which a Jim Cramer would focus on, 20% of the model. Technicals are only 15%, but they're an important component. And then expert opinions. What are the smartest people in Wall Street doing and saying about the stocks that you're trading? So we look at insider activity to see if the insiders are buying, because that's very bullish. We look at short interest to see if the short sellers are aggressive in a stock, because these are the smartest people on Wall Street. And then we're particularly interested in what the analysts are saying and what the industry group strength is. And you'll see that as part of our 5-step methodology. Analyst estimate revisions have been proven in academic studies to be the single biggest short-term driver of stock price movements. They key off earnings surprises, and we've seen a ton of them every day during earnings season, and we saw them again today. And when a company's surprised to the upside or the downside, analysts start changing their estimates, and this drives stock prices. We're going to use Disney as the poster child for this. So how is the Chaikin Power Gauge rating done in real time? Well, first of all, we group everything into 5 buckets from very bearish to very bullish. The gauge itself is very simple. It's a simple display like the gas gauge on your car, as you just saw. But under the hood, there's something very powerful. So what I like to say is that the power gauge is like Chevrolet with a Ferrari engine under the hood. And it's performed very well. This is a combination of back-tested results, which always look good, and real-world results, which began in January of 2011. The model was frozen in September of 2010, hasn't been changed since, so there's no curve fitting or optimization here. I don't believe in that, and it doesn't need to be done, but a lot of people try and do that. The bottom line takeaway here is that the very bullish stocks, 428 of them at any given point in time, and the Russell 3000 have averaged better than a 21% gain over a 16-year period, and the average very bearish stock over here has basically been flat in a time when the market's been down, the market's been up 9% rather. Now, what's happened in the last 12 months? Well, the shape of the curve is exactly the same. The very bullish stocks have been up 10% through the end of the second quarter, and the very bearish stocks in this case have been down 2.5%. So you've got a choice. If you're trading, or you're investing in your 401k plan, or you're a swing trader, if you constantly focus on the very bullish stocks, and that's what this whole 5-step methodology is all about, you're going to make money because you're skewing the odds in your favor. On the other hand, if you're constantly taking long positions in stocks with very bearish ratings, you're going to get chewed up because you're bucking the trend. And not just the price trend, you're bucking the fundamental factors that drive institutional investors. Now, a second level of validation are the NASDAQ Chaikin indexes, which were launched on April 1st of 2014. We launched the NASDAQ Chaikin Large Cap, Small Cap, and Dividend Achievers Index after NASDAQ spent 3 months kicking the tires on the Chaikin Power Gauge rating, backtesting it in their quantitative research department in Rockville, Maryland, and coming away feeling that the Chaikin Power Gauge rating really added value. And so we launched these 3 indexes, and the ground rules were pretty simple. NASDAQ rebalances their indexes once a year. Their large cap 300 is sort of like the S&P 500. So whatever sub-indexes we created by using the power gauge as the decider couldn't be changed for a year. So even though we say that the power gauge rating has predictive value 3 to 6 months out, and by the way, that also means it's good for options traders because stocks that are going to go up over the next 3 to 6 months or down are also going to go up over the next 3 to 6 weeks. So what were the results of the NASDAQ Chaikin co-branded indexes 1 year later when the rebalance took place? Well, each of the 3 NASDAQ Chaikin indexes, which had fewer constituents than the NASDAQ benchmark, outperformed the benchmark by over 50%. This proves that the staying power of the power gauge rating lasts even beyond 3 to 6 months. And since we've rebalanced, all 3 of these indexes are once again outperforming their benchmark. So 2 proof points, our own backtesting and the performance of the NASDAQ Chaikin indexes, which you can get on Google, on Bloomberg, on Reuters, on Yahoo Finance, CNBC. They're measured minute by minute. Ultimately, people will create ETFs. I see we're getting a lot of questions. Can I buy these indexes? Well, the answer is no, not right now. But sometime soon, hopefully within the next 3 to 6 months, a large ETF creator will license 1 or more of these indexes to create ETFs, and you will be able to buy them. But what we're going to do in the rest of this webinar is show you how you can find the same stocks that we put into the index. And by the way, the constituents in those indexes are in Chaikin Analytics in our list manager. So you can actually see the stocks over the course of the next 9 months that we put into those indexes based on our computer screens on April 1st of 15. So the 5 keys to outperforming the market begins with how to find bulls and bears with the Chaikin Power Gauge rating and Chaikin Relative Strength, which is a unique indicator. And we call that combination of the Power Gauge rating and the Relative Strength the dynamic duo. The dynamic duo finds big winners and losers. And the reason it does is because when Chaikin Relative Strength is positive and the Power Gauge rating is bullish, and we're going to see charts on this in a minute so you'll understand how it looks on a chart, the market is confirming the model. The market and the model agree. And when the market and the model agree, you get price acceleration. If it's bullish, you get price acceleration to the upside. If it's bearish, you get price acceleration to the downside. Now, one additional key point. Relative strength stands alone as a bullish or bearish indicator. Now, usually if relative strength is strong and the power gauge is neutral, that means you're dealing with a high momentum stock, rich valuations. Warren Buffett wouldn't go near these stocks, but they can go up big time, and we've seen examples of that. We're going to see one in a minute. The bottom line is that superior returns come from stocks that outperform the market. When the dynamic duo is in place, when the market agrees with the model because the Chaikin Power Gauge rating is bullish and the relative strength is bullish, these are the stocks that give you outsized performance on the upside, and when the reverse is true, on the downside. So let's look at 3 examples. The first example is Starbucks. Now, in November, December, the power gauge had turned bullish. The stock was trading here in the low 40s. And then relative strength turned bullish. Now, how do we know that? It went from red to green. Now, one of the problems with investing today is information overload. You could go to Investors Business Daily and see a pretty good relative strength indicator. It looks back over roughly the same 6-month period that we look back, but you'd see a number from 1 to 99. Then you'd have to remember that and then go to a chart. We combine all of this on the Chaikin charts. This is from our iPad app, Chaikin Analytics for iPad. So when the relative strength is green and the power gauge is green, the market agrees with the model and you get price acceleration. Now for a period of 4 months, Starbucks went neutral, primarily on a valuation basis. And then in mid-April, it turned bullish again. Relative strength stayed strong the whole time. And look at this wonderful up move in Starbucks from the low 40s to the high to mid-50s. That's typical of what happens when the dynamic duo is working on the upside. Now let's flip it. Here's Yahoo. Look what happens in January. After all the hype about Alibaba and how it was going to drive Yahoo to the moon, Alibaba started disappointing Wall Street. Chinese e-commerce and internet traffic started to drop off, and this wonderful bonanza turned into a nightmare for Yahoo. And at the point in time that you had the dynamic duo operating on the downside, meaning that the power gauge rating was bearish, and that's at the bottom of this one-year chart of Yahoo. It's a red, green, yellow ribbon. And then the relative strength turned bearish. We have a name for that. That's going to be in the next section. The market's now agreeing with the model. That means the dynamic duo is operative. And look at these wonderful opportunities to sell based on one of our 6 pairs of buy and sell signals that we call an overbought sell signal. Really simple pattern. I owe this one to Larry Williams. He's been a mentor to me. And basically, he says if you're bearish on a stock and it makes a new 8-day high, that's a potential selling opportunity. We combine that and require that the power gauge be bearish and the stock gets overbought rather, and that triggers an overbought sell signal. Now, Steve's candlestick patterns are absolutely fabulous at identifying those tops. Combine that with the T-line, breaking the T-line, which I've used for 12 years, even before I met Steve, and you've got a really powerful combination. So now let's look at that instance where relative strength stands alone, and here we're going to look at Amazon. The power gauge had been bearish on the left side of the chart here in late 14 into January of 15, and relative strength was bearish. So from our point of view, you wanted to avoid Amazon, look for put buying opportunities. Then in January of 15, they reported better than expected earnings. Relative strength went from red to green, so it turned positive. But the power gauge, because of the rich valuations of Amazon, do they make money? Don't they? It depends on the accounting you choose to use. Selling at a very high price to sales ratio, which is one of our 20 factors, sort of precludes Amazon from going bullish in the Chaikin power gauge rating system. But as I said, relative strength stands alone. So when relative strength is positive, and particularly when the Chaikin Money Flow indicates that the institutions are aggressively buying the stock, which you know because the money flow is a big mountain of green, you can trade that from the upside. But be aware that if the power gauge is neutral and not bullish, because of the valuation factors, and you can drill down and see what they are, you're on a high wire without a safety net. And when something goes wrong, as it did with Green Mountain Coffee, with their business model, there's a price to be paid because you're going to crash and burn. Now, interestingly, money has been coming out of Amazon. How do we know that? The money flow is negative. But the stock keeps going up, so relative strength stands alone as a bullish or a bearish indicator. So that's step 1 of the 5 keys to outperforming the market. Step number 2 of this 5-step method are the 3 indicators that predict future price movement. Personality changes, Chaikin Money Flow, and group strength or weakness. If you master these 3 indicators, combine them with a dynamic duo, you're going to find the best stocks to trade from the long side and the short side. So let's look at personality changes. Well, the key to turbocharging your profits is spotting personality changes. Now, what we call a personality change is when the stock goes from outperforming the market or green to underperforming the market or red. And what you want to do is spot these personality changes as they're happening, and we're going to see an example of that in Disney and in Apple, because the worst thing that can happen as a trader is to be on the wrong side of that door when Jack Nicholson is coming through with the axe. So spotting personality changes is a critical element of this 5-step methodology. So here's 2 examples of that. Here's Valero. Energy has been a dog since August 2014. For some of the drillers and the drilling equipment stocks, energy's been in a bearish trend since January of 14. But there's one segment of the energy sector that's been bullish, and that's the refiners. So here's Valero, which had been underperforming the market with a neutral power gauge rating all through the end of 14 into early 15, with a personality change. Relative strength went from red or underperforming to green or outperforming, and the power gauge was bullish. So not only did you have a personality change, but you had that dynamic duo in play, and you got acceleration to the upside. And look at the money flow, because the institutions were buying the stock aggressively, and then the stock would periodically pull back and give what we call our relative strength buy signal. And I'll go into that on another chart. But it keys off relative strength, doesn't care about the power gauge. So there's an example of a bullish personality change. Here's Whole Foods. Now this chart ends in June of 2014 when Whole Foods had reported 3 straight disappointing quarters. But notice that prior to that, you had had a negative personality change. Whole Foods went from outperforming to underperforming, went from green to red, and the power gauge was bearish. That sets you up for something that we're going to talk about as our fourth step, which is how to make money during earnings season. Because stocks that have bearish relative strength and a bearish power gauge rating, meaning that the fundamentals are negative and the market is negative on the stock, tend to disappoint and report negative earnings surprises, and typically they will spike down. We actually recommended a short sale or a put buy on Whole Foods back here in May of 2014 based on the fact that we had had a relative strength sell signal and earnings were due out, and we had this dynamic duo in place. So there are your 2 examples of the personality change. Second one of these 3 indicators that helps predict where a stock's going is Chaikin Money Flow. Now, institutions like to fly under the radar screen. The big institutions cannot execute their orders all on the same day. They're too big. So they do it over time. And Chaikin Money Flow has a lot of different attributes. You use it in a lot of different ways, but something we've been teaching institutional investors for years in trading desks and hedge funds is how to use Chaikin Money Flow to monitor stealth buying and selling. So here's an example of stealth accumulation. This is a chart of EMC, a data storage company. This chart ends in March of 14. But back here in June, July of 13, EMC was going sideways for 4 weeks. Look at the Chaikin Money Flow. It should have gone red or negative because Chaikin Money Flow typically fluctuates around a zero line. It looks back at 21 days, so it's 1 month measurement of accumulation and distribution. It's been in the marketplace for 30 years. It's on every trading platform and PC-based software platform, stockcharts.com, any of your brokerage firm platforms. But look what happens in this consolidation phase. Chaikin Money Flow was green or positive the whole time, indicating that you were likely to break out to the upside from that trading range. Now let's look at stealth distribution. Here's a stock called FLIR. They're in the aerospace business. They make instrumentation for planes. And same sort of consolidation going on as an EMC, but when you look down at the money flow, you see that instead of being all green in that period, it was all red. So what does that tell us? It tells us that the likely resolution of that trading range, that sort of sideways consolidation, is to the downside. And when the relative strength and the power gauge are also negative, that's sort of your trifecta. And the stock, in fact, did break down and break down hard. Now let's look at a more recent example. I try to put up a lot of the stocks that people are seeing in the news, interested in, and trading. So Twitter. Well, on this one-year chart of Twitter, we see 2 bearish personality changes. One back here in October of 14. We didn't yet have a rating on Twitter because it hadn't been public for a year. But then in late November, the power gauge turned bearish, and Twitter was in a big downtrend from October through the bottom in February. And then the stock rallied sharply. So just because the power gauge is bearish doesn't mean the stock can't rally, but what it does mean is that you don't want to play in that sandbox. This is a tough schoolyard. If you remember back to your grade school days, there were tough people and there were nice guys, and unless you were looking for trouble, you hung around with the nice guys. Well, when the power gauge is bearish, that's saying this is not a nice stock. You can trade it from a momentum basis, but the odds are stacked against you. But then look what happens. At the peak in the rally, Chaikin Money Flow was negative. It should have gone green or positive. And then the stock reported a negative earnings surprise, and you got a second bearish personality change, but this time the power gauge was already bearish. Money flow was negative, and you went into that same consolidation pattern that you did in EMC and FLIR, and with the power gauge bearish and money flow negative through that whole 5-week consolidation with some sell signals based on money flow, it told you that there was likely to be a breakdown to the downside, and we had some very big downside action in Twitter today. I think it was down over 6% by the close, maybe even more. So here's a recent example of stealth distribution using Chaikin Money Flow. Now, the third indicator that gives you a sense of where a stock is headed is, I think, extremely important, and that's industry group and sector relative strength. And when you're invested on the long side in stocks in strong industry groups, you've got a tailwind, or stocks in strong sectors. And we have a unique way of looking at that we're going to look at in a minute. On the other hand, if you're constantly long stocks in weak industry groups, you're basically rowing against the tide, and you've got headwinds, which means it's harder to make money, but these are perfect stocks to be trading from the short side. So how does Chaikin Analytics help you determine which sectors and groups are strong and which are weak? Well, we have a list manager that's very, very easy to use, that's grouped with user lists, industry groups, 65 of them, curated by Zacks, indices, ETFs, and Chaikin Hot Lists. So I've highlighted the ETF tab, and that brings up a whole series of categories for ETFs. Now, I know a lot of you trade ETFs, but what we're going to look at now is how to find stocks using a top-down approach, which is how the institutions work. Everything we talked about up to now is bottoms up. How do I find the best stocks? Top-down says, I want to know where the best opportunities are in terms of groups and sectors. So I tap on Spider Sectors, and I see the 9 select Spider Sector ETFs, which represent the large cap S&P 500 broken down into 9 sectors. And I know a lot of you trade these because it's a way to trade without having to pick individual stocks, but we're going to show you a technique now to find the best of the best. So we do something unique. We have something called the Chaikin Power Bar. Instead of looking at price momentum and relative strength, which is what most people who analyze groups and sectors do, Zacks and Standard & Poor's and Investors Business Daily, we rank the 9 sectors in almost any list or industry group within Chaikin by the number of stocks that have bullish versus bearish power gauge ratings. So again, we're looking under the hood. We want to know where the potential is. And right now, as of last night's close, there are only 3 of the 9 sectors that had more bullish than bearish power gauge ratings. That's why the market had so much trouble getting through overhead resistance above 2130. In fact, if you look at the spider here, there are only 81 stocks with bullish ratings and 127 with bearish going into today's session. So healthcare and financials have been at the top of the list virtually nonstop for the last 12 months. So if I tap on healthcare, I bring up the XLV, which is the healthcare ETF. I see that there was a bullish personality change back in July of 2014 because healthcare went from underperforming to outperforming. And I see that basically healthcare has been leading the market higher. And through last night's close, that was true. Now, I can then drill down and find the strongest stocks, because when you drill down, and in this case I didn't drill down on the XLV because that's only large cap healthcare. I drilled down on the XHS, which is the Standard & Poor's Healthcare Services ETF, because I wanted to get some smaller cap and mid cap names in there as well. We rank every list in this panel display by Chaikin Power Gauge rating. So I've circled the 2 strongest stocks in the group because we've been talking about them and highlighting them and featuring them as our bullish stocks of the week for the last 9 months. Aetna and American Surgical, which is named AmSurg. So by tapping on the panel, you can see a chart. So we're going to look first at AMSG, AmSurg. This is not a very well-known healthcare stock. They basically made an acquisition which has enabled them to expand by acquiring mobile surgical centers and mobile radiology centers and anesthesiology centers. Hospitals are outsourcing. So here's a perfect example of how a sector and an industry group can lead you to very strong stocks. And by the way, there's a bullish personality change. At a point in time when the power gauge was bullish, so now the market agrees with the model. You've got that dynamic duo in place, and you're just looking for entry points. So we focus on the oversold buys, 8-day low, power gauge is bullish, and you're oversold. Use that candlestick pattern and the T-line, and you've really got the ability to pinpoint entries. So AmSurg has been a favorite of ours. Again, stocks with bullish power gauge ratings are more likely to report positive earnings surprises. That's what this big gap is all about. A positive earnings surprise in late July, right after a buy signal. And they announced an acquisition as well. And this stock just isn't pulling back. Now, it's going to pull back a bit tomorrow because the market's probably going to flush out tomorrow at a minimum. And you may get an opportunity to buy this stock if you're bullish and you want to put money on Aetna. Now, I've circled the fact that the technicals are strong on Aetna and they're in a strong industry group. That's what this third indicator that helps you predict where a stock is going is all about. Finding strong stocks based on the power gauge and relative strength in strong industry groups. And again, oversold buy signals. They announce an acquisition of Humana. The stock sells off. A lot of profit-taking, nervousness that maybe the peak has been seen in healthcare stocks. Power gauge goes neutral, but now it comes on again and had a pretty good retracement rally, almost filling that gap. But the key takeaway here is if you're looking at strong sectors and strong industry groups and then the strongest stocks within that category, you're going to find the best of the best. Trade these from the long side. Trade them with options, swing trade them, put them in your 401k plan. Price acceleration takes place when the market agrees with the model. Now let's look at the flip side and find a weak sector, energy. We all know what's happened to energy over the last year. It's been a disaster except for the refiners. So we tap on XLE, and now we see the XLE, and we've got a relative strength breakdown signal in late August of 14. At that point, every energy stock in your portfolio should be held up to the highest scrutiny. If the power gauge is bearish, just get rid of it. And watch for those personality changes. And look what's happened to energy. Even when you got this retracement rally when crude oil went from $40 to $60 a barrel, relative strength stayed negative. There's a persistency to our relative strength computation. We look out over 6 months, but it's almost like a stochastic of relative strength. It's unique, and its output is a heat map. So now let's drill down on the XLE, and here we see the XLE as of last night's close, ranked by Chaikin Power Gauge ratings. Notice that there are 5 bullish large cap energy stocks. 4 of them are refiners. We've already looked at Valero. I've circled Tesoro. And here at the bottom are the bearish stocks. So I've circled Anadarko Petroleum, which gave a sell signal based on last night's close coming into today's trading. So let's drill down. First, we'll look at Diamond Offshore. This is one of those stocks that in the energy sector had a bearish power gauge rating going back to January of 14. Someone knew something because crude oil didn't break down until late August of 14, but the offshore drillers and the drilling supply companies had bearish power gauge ratings and relative strength back to 2014, January, so it's almost 18 months. And all along the way, you had this chance to sell a stock like Diamond Offshore if you kept your position or use it to buy put options. And look at the money flow. It's still coming out of these stocks. But now let's look at Anadarko. What happened back in August, September when the sector went bearish? Well, Anadarko had a bearish personality change. It went from outperforming to underperforming the market. And then in late September, the power gauge turned bearish. Anadarko was still well above 100. And in short order, it dropped all the way down to 70. With a sell signal here, a relative strength sell signal. So this is probably a good time to explain the relative strength sell signal. It makes so much sense and it's so easy to spot. Four of our signals want the power gauge to be in the direction of the signal. Two of them rather, the relative strength signals don't care about the power gauge. They're just keying in on whether the stock's outperforming or underperforming the market. So how do we get a relative strength sell signal? Relative strength is red, indicating the stock's underperforming the market. The stock moves above its 21-day exponential average and then drops back below it. And that triggers a relative strength sell signal. Two out of three of these signals typically work. This one has a time horizon of 4 to 8 weeks, so it's great for swing traders or for options traders who don't want to trade weeklies but want to stay in an options position a little longer and maximize the leverage. Helps guide you into strike price and expiration date. But the relative strength sell signals are very powerful, and if we do go into an extended decline, you want to look for these relative strength sell signals because they're great opportunities to buy put options, and of course back to the T-line and the candlestick patterns because this is all very compatible. So Anadarko had a sell signal coming into today, a money flow sell, and this stock was down very sharply today. So coming in this morning, you could have put on a bearish position in Anadarko based on the sector, industry group, power gauge, and relative strength and Chaikin Money Flow. Everything was lined up. When everything's lined up, Warren Buffett loves you. Warren Buffett has this theory that they don't call balls and strikes on Wall Street, so you can wait for a fat pitch. You don't have to swing at every pitch. He does this because Ted Williams is his idol. And Ted Williams, arguably the best hitter ever in baseball, had a very small strike zone. He only swung at a pitch that he knew he could drive. And so how do you translate that to the stock market? Wait for the right setup. Wait for everything to line up. If it doesn't, pass on that. There's 5,000 stocks to trade. There's 60 large cap energy stocks, another 100 mid cap, and plenty of small cap energies. You don't have to trade any one. If everything lines up and you get a signal, that's when you want to take action. So now we'll look at Tesoro, which was the only bullish stock in the energy sector in the S&P 500 in 2014. And just as with Valero, Tesoro recently made a new high at the same time that all these other energy stocks and the XLE were making new lows. Why? Because the market was agreeing with the model. Not only was the power gauge bullish, indicating that the fundamental potential for Tesoro and the other refiners ultimately was bullish, but it was outperforming the market. So remember that Valero didn't go bullish till late January. Tesoro was bullish all through 2014. So the power gauge has the ability to discriminate within an industry group and cull the good from the bad. So that's sort of our three indicators that help point you in the right direction along with the dynamic duo. Now, Once you've mastered these three indicators in a dynamic duo, what does it lead you to? Well, it leads you to what we call Chaikin classic bulls and bears. And a classic bull in the Chaikin methodology is very simple to define. Power gauge is bullish, relative strength to the market is strong, and Chaikin money flow is strong, indicating that the institutions are accumulating the stock. So our poster child here for a classic bull is a healthcare stock called Quintiles. Now Quintiles provides diagnostic testing for drug companies. They also provide software so drug companies can do it themselves. And it's not a very well-known stock. That's the beauty of Chaikin. It finds stocks that are not necessarily in the news, but have the potential for price acceleration. So why do we call this a classic bull? Well, the stock's been outperforming the market with a bullish power gauge rating, and look at all this money flow. And from that point, when the money flow was really strong, this stock went and skyrocketed. Big, big moves with all these oversold buy signals along the way. 2 out of 3 work. The oversold buy signal has a time framework of only 5 to 10 days. It'll typically go to the upper volatility band. So it's great for trading weekly options. Again, use the candlesticks and the T-line because this isn't meant to be a precise, it's bottoming now and ready and going to turn tomorrow's signal. It's an opportunity alert. It's a buy alert. The relative strength buy signal is more of an action signal because the stock is already reversed after a decline. So there's your example of a classic Chaikin bull. And flip it on its head and you get a classic Chaikin bear. Power gauge rating bearish, underperforming the market. Money flow is red, not green, indicating that the institutions are selling the pants off the stock. And here's our classic example, has been for over 9 months, Wynn Resorts, casino stock in Las Vegas and Macau. We all know if we're following casino stocks that Macau has become a disaster with year-over-year revenues dropping at 30 and 40%, and the Chinese consumer not as free with his wallet. So how does that translate into Macau and Wynn? Well, power gauge has been bearish for over 15 months, and Wynn has been underperforming the market. So the market has been agreeing with the model. That's your dynamic duo on the downside. And Chaikin Money Flow is still indicating that the institutions keep selling the stock. So we've got these money flow sell signals. Money flow sell comes when a stock rallies with negative money flow and then reverses back down through the T-line. Again, before I met Jim, I'm using that 8-period exponential as my trigger. So you get a little bit of a rally. It goes back down through the T-line. Power gauge is bearish. Money flow is bearish. That's a money flow sell signal. Very, very profitable. Again, time horizon 5 to 10 days. So how do you find these stocks? Well, that's a good question, and we've expanded our list manager to help you find it. So within Chaikin Hot Lists, we have a category called Power Gauge Hot Lists, where we have all the bullish stocks, stocks that have turned bullish this week, all the bearish, and so forth. And we're adding to that. This weekend, we're going to add the classic bulls and bears to the Chaikin Hot List. So you can just go to the hot list, click on it, and see all the classic Chaikin bulls and bears. And we're going to narrow it down to a list of about 20 to 40 names because there could be 100 of them, and that's too many to even consider. And then in a couple of weeks after that, we're going to add the personality changes. So these lists are a great source of ideas. We want to try and make you self-sufficient, but it's always nice to have a starting point. So if you can see these stocks that meet these criteria that our computer has screened for you, you can then look at the charts and decide which ones to start following and trading. That's the beauty of Chaikin. Not only do we give you the tools, but we give you the ideas filtered down, not just to 1 or 2, because that's what our market letter does, But we don't want you to be sheep following me like a guru, because that's the last thing I want to be in life. But we want to make you self-sufficient, and this way of finding bullish and bearish stocks, the classic Chaikin bears and bulls and the turnarounds and the personality changes, very, very important component. We're constantly adding based on user feedback. So we've looked at the first two keys, and now we want to look about timing, because obviously timing is everything, particularly if you're trading options. So we've got 6 pairs of buy and sell signals in Chaikin Analytics. And the reason you want to follow a disciplined methodology is because it's better than trading on your emotions. So here's a chart of Expedia, and that's a signal that we got which led to a very big up move in the price. And it's indicative, these relative strength buy signals, of why you want to have a very predetermined disciplined methodology. It gives you conviction, because at the point in time that you got that relative strength buy signal, which worked out beautifully, money flow was negative. So you might have said, well, gee, everything's not lining up, but now you've got the signal. So 3 out of 4 things are lining up: bullish, power gauge, outperforming the market, and you get a relative strength buy signal. So you're going to have more conviction if you're following a discipline. And that's what Steve does for you with the power, with the T-line and the candlestick patterns. Now on the downside, Stratus is one of those 3D printing stocks, bearish power gauge, bearish personality change, underperforming the market, lots of negative money flow. When you get those signals, follow them. 2 out of 3 work, and as all of you know, 2 out of 3 in the options world is fabulous, because you can make 100, 200, 300% on a good options trade, and if all you lose is the cost of the option on a bad trade, 2 out of 3 is a great winning percentage. So the question came up when we introduced Chaikin Analytics in January of 2013, how do I find these signals? In the same way, how do I know which stocks are classic bulls and bears or personality changes? So we built the dashboard in both our iPad and our desktop app. And this is what my dashboard looked like for a stock list that I call My Stocks, which everybody creates in Chaikin, on August 13th, just a week ago. I had a sell signal in Pioneer Natural Resources, PXD, one of those fracking stocks looking for new finds in oil and gas. And the stock was 130, and it gave an overbought sell signal. And this is what happened to the stock. There's the signal. Stock has gone from 130 to 120 in just a week. So the dashboard alerts help you find the signals. They're actionable. We look at 2 days worth of signals, bullish and bearish, and they're a source of ideas. Once you master this whole 5-step methodology, you're going to know which stocks you're trading long and short, and the signals are your trigger. So the signals are very important. The 4th key to outperforming the market is using the power gauge rating during earnings season to supercharge your portfolio. This is really important. So let's look at winning plays on the long and the short side during earnings season. Now the poster child is Netflix. Before it had that huge move, split 7 for 1, became everybody's favorite media stock. In October of 14, there was a sell signal on Netflix just a few days before they were due to report earnings. We made this our bearish stock of the week. Excuse me. People who bought out of the money puts made 50 times in one day, but I think that was a risky trade. But one of our subscribers, a recent subscriber at that point, made a quick $21,500 profit by using the upcoming earnings ideas list in Chaikin. Seeing that Netflix had a bearish rating, he bought 3 put contracts before earnings on 10/15 of 2014 for $22.20, and he sold them the day after earnings for $93.90. Quick $21,500 profit, and that was a relatively new subscriber. So let's look at some more recent examples of how Chaikin can help you supercharge your profits during earnings season. So here's Whole Foods. We saw it back in 2014 as our poster child for a bearish personality change. But then, just as with Amazon, Whole Foods reported a better than expected quarter, and it started outperforming the market. Same as Amazon, power gauge is neutral because the valuations for Whole Foods were terrible. But the institutions and the traders, the hedge funds, were just barreling in there. Some of that's short covering, some of that's long buying. But then the inevitable happened. Whole Foods, with a flawed business model, started rolling over, and you got a bearish personality change at a point in time that the power gauge was negative. This is April of 2015. And then you had a bearish earnings surprise and the stock gapped down. And then it went sideways with money flow negative. There's that stealth distribution pattern. And right before they were due to report earnings at the end of July, we had a money flow sell signal. And guess what? Whole Foods disappointed, gapped down 15%, and has continued to go lower. And yesterday, Jim Cramer said, I can see Whole Foods going down to 20 from 32. But if you had been following Chaikin, you could have bought put options knowing that you had a sell signal and everything lined up in a bearish way. Now, what this also led to is something that very often happens in Wall Street. Whole Foods reports first, and then two of their competitors report. Sprouts Farmers Market reported about a week later, and I tweeted on this one and said, buy puts today because they report after the close. Based on Whole Foods disappointing, the likelihood is that Sprouts will disappoint. Now, Sprouts had a bearish power gauge rating, and it triggered a sell signal. I took a lot of heat on Twitter. Someone called me a dumbass for assuming that just because Whole Foods reported badly that Sprouts would report badly. Well, I haven't heard from that guy since because Sprouts dropped 15% the day after they reported, gapped down the following morning, and has continued to be weak. And guess what? The fresh market, which is the third link in the chain of natural food and organic food companies, reported after the close today. I didn't tweet on this one because I didn't want to press my luck. Trading down 15% in the aftermarket after a terrible earnings report. So that's why you want to be focusing on industry groups. This whole organic food, natural food industry is hurting. People like Kroger are going into the business and undercutting them on a price basis. They're no longer unique. Things have changed. The valuations were very high. You're on a high wire without a safety net. Now let's look at Green Mountain. Bearish personality change in November of 14. The stock was trading well above 100. Money flow started coming out of the stock. Power gauge then turned bearish. So now the market is agreeing with the model. You had a sell signal ahead of the earnings in late April, and yet again, another stock we tweeted on, buy puts on Green Mountain ahead of that earnings report. And even that relative strength sell signal, which came after the gap down, was a profitable signal because it's never too late to short a stock that has a bearish power gauge rating and relative strength with weak money flow. You never know where the bottom is. Anybody who's lived through 2000 or 2008 knows that there is no bottom until the market says there's a bottom, and overvalued stocks get taken to the woodshed and go to really extremes on the downside. Now here's one that didn't work, and I actually own puts on this, so I felt the pain along with our subscribers. NetApp, which makes storage equipment, big corporations, it's sort of a junior EMC, has really had a bad time of it. You can see it gap down in April. After that terrible earnings report, they fired the CEO, and everything looked bearish on NetApp going into last night's earnings report. Power gauge was bearish. underperforming the market, weak money flow. We had had a sell signal and actually traded down into yesterday's earnings report. And at least on the surface, the company pulled a rabbit out of a hat because the stock was up 3 or 4 or 5% earlier today. With the market weakness, it finished up only 3%. It finished actually at the same price we recommended it in our market insights on Sunday as our bearish stock of the week. So these don't work all the time. That's why options are such a beautiful way to implement Chaikin power gauge rating during earnings season, because the power gauge rating is like a GPS, and they're not all going to work. So NetApp didn't work, but Green Mountain, Whole Foods, Sprouts, whole host of stocks, ESL, Qualcomm, all worked. This one didn't work. Nothing works all the time. Now let's look at a stock and another pattern that's really helpful. American Woodmark, third largest manufacturer of kitchen cabinets in America. Again, not a well-known name, small to mid-cap stock, but has been reporting a series of positive earnings surprises. Now, they reported after the close yesterday, and they met estimates and they met revenue targets, and the stock actually opened at a new high this morning. Great opportunity to sell during earnings season. If you're long a stock because of Chaikin or Bigelow or Kramer or your own analysis, they report earnings and the market reacts positively. Great opportunity to sell and take money off the table. Now, I know this was a great opportunity because my wife, who's never traded stocks up until 3 years ago when she started working with Chaikin, our marketing and PR coordinator, has been killing them by following this 5-step methodology that we're talking about. So she's been long American Woodmark since back here at a price of about 55, 53. When she saw that they were opening higher, knew that the market was weak based on the futures, she sold at the market. She got the absolute high of the year for American Woodmark. Sadly, by the end of the day, the stock was down 10%. So here's an example of a stock that reported earnings that were fine and gapped up to a new high. Great opportunity to sell. Earnings season, these gaps are your friend. If you're following the power gauge, you're going to be on the right side of them. Now, the last of the 5 keys is how to avoid landmines that destroy portfolios. Particularly important given what's happened in the market in the last week or so. We've been in a trading range. We couldn't break through on the upside. I had identified 2040 as our sort of Maginot line support, and we put out a bearish alert because it looked like it was going to break that at around 3:30, quarter to 4, and in fact it did. S&P 500 closed at 2035. And that's not good for the market on a short-term basis. As I said, downside target 1980 to 2000. By the way, Chaikin's not registered with any state or federal regulatory agency, so all the examples and ideas we're talking about here are for educational purposes, not meant to be recommendations to buy or sell stocks. So how do you use Chaikin to avoid landmines that destroy portfolios? Well, first of all, Chaikin enables you to play good defense, which does lead to good offense because you can turn landmines into gold mines by playing good defense. So what does playing good defense mean? Well, it means selling any stock with a bearish power gauge rating, and when we look at Disney, you'll see how important that is. It means using good money management and risk management disciplines. Don't put too much of your money into any one trade. Don't risk too much of your capital on any one trade. And then finally, it means looking for opportunities to go short stocks where everything is bearish in the Chaikin methodology. So here's another 3D printing stock, Triple D. The power gauge actually went bearish in January of 14 at a price of 95. It's trading well under 20. It's under 15. And along the way, you had opportunities to buy put options or go short. Triple D is a disaster. So the first order of business play good defense, avoid landmines, is sell any stock with a bearish power gauge rating if you own it, and stop trading it from the long side. Second order of business is to find put buying opportunities. Now here's another example of that in a much more conservative stock. NSC, Norfolk and Southern, very big railroad. You'd think that you're pretty immune with a decent dividend from landmines in the railroad stocks. Not the case. All the railroads, this is your industry group trend again, all the railroads have been weak. Norfolk and Southern, Kansas City Southern, Union Pacific, CSX, and one that we can't even see, which is Burlington Northern. And the reason we can't see it is because Warren Buffett scooped it up. No longer trades. Part of the reason Berkshire Hathaway has been so weak, in addition to the fact that they own Coca-Cola and IBM, because Warren Buffett has this stubborn streak, and he's got a 5 to 10 year time horizon and all this money from Geico and his reinsurance companies to fund it, bought Burlington Northern. And that's going down along with all the rail stocks. But the key point here is when the power gauge turned bearish and you had a bearish personality change with Norfolk and Southern up above 100, you just want to get out of the stock. You're going to sleep better. Anxiety level goes down. You have fewer decisions to make. You're not going to wonder when to get out or why you stayed in it. Look for something with a bullish power gauge rating. Even if Norfolk and Southern went up, I guarantee you if you'd bought a stock with a bullish power gauge rating, even in the transportation sector back there in November of 14, you would have been buying LUV or JetBlue and making money for 3 or 4 months while Norfolk and Southern was going nowhere and ultimately about to collapse. Now let's look at 2 very recent examples. I said Disney was very important. Well, Disney made a new high the day it reported earnings after the close a week and a half ago. Power gauge was bullish, outperforming the market. There was no clue that Disney was vulnerable. And then CEO Robert Iger said one sentence that destroyed Disney. He said, "We're experiencing a little slippage in ESPN subscriptions." Kiss of death. So what happened? Stock gapped down, went down another day and started consolidating. And you had a bearish personality change. And then 2 days later, the power gauge turned bearish. Disney was about 106, 107 when the power gauge turned bearish. You must be religious in the Chaikin 5-step methodology and get out of that stock when the power gauge turns bearish. Now, your clue was the personality change. You could have used that and gotten out a couple of days early, roughly the same price, 105, 107. What happened to Disney today? Traded down to 100, down 6%. And Kramer is now saying, whereas a week ago he was saying, well, Disney will go down to 100 and it'll be a buy. He's now saying Disney isn't done on the downside. Follow the Chaikin methodology, you would have been long the stock all the way up, almost a double in the stock, blindsided by something that nobody anticipated, and now you've just got to be negative on Disney. The power gauge is bearish. The analysts have turned bearish. They're lowering their estimates. It's underperforming the market. Valuations were a little bit rich. The 20-factor model is now working against you, not for you, like it did all through 2014 and 15. So you've got to be religious about this. And let's end the webinar by looking at Apple, because Apple has had a bearish personality change. Now, it did this in 2012-13, and you had 6 relative strength sell signals when Apple rallied 10 to 15% above its 21-day average as it was coming down from 700 to 380. Now, I don't know that Apple's going to have that kind of decline now, but it sure looks heavy in Wall Street terminology. And this triple top or quadruple top that we have just seen in Apple was accompanied by negative Chaikin Money Flow. So when Apple made that new high after reporting earnings, remember, spikes after earnings reports are your best spot to take profits. Sell them when everybody wants them. Money flow is negative. Thank you, Victor. Appreciate that. then you get a bearish personality change. So the power gauge is neutral on Apple. It's not going to go bearish because the fundamentals are still very strong, a lot of cash flow, buying back stock. There's some very positive things, but the analysts are turning queasy on Apple. But you've had a bearish personality change. And the stock was actually better than the market. It was down only about 2%. Most of the momentum stocks got drilled today, which is why I put out my bearish sell alert. When the momentum stocks capitulate, you usually see further weakness. So if you're a bull on Apple, it's time to take a pause, in my view, and respect the fact that you've had a bearish personality change and wait for some positive sign that Apple is ready to turn around. I don't see it. I know a lot of people trade Apple. If you've been trading it from the long side since May, you've been unhappy. The money flow would have helped you stay on the right side of that because you want to see the money flow green when you're making new highs. So those are the 5 steps. An hour later, after we started our webinar, you now know the 5 keys to outperforming the market. And in a down market, that last one, avoiding landmines that destroy portfolios, is absolutely critical. So what are your next steps to success? Well, first, reserve your professional training session with Chaikin Analytics. Secondly, get our daily and weekly tips and insights. I write a weekly market letter. Our market strategist, John Schlitz, writes a daily market letter. You get it before the opening. Sign up for your personal coaching sessions and apply the 5-step system and methodology, the 5 keys, to your own trading or investing strategies. So the platform is Chaikin Analytics for iPad and desktop. And Chaikin Analytics is normally $1,950 a year. But we've got a webinar special taking $200 off for the Candlestick community, bringing the price down to $1,750. Go to chaikinanalytics.com/candle and enter the offer code CANDLE. It'll probably be pre-populated. This offer is good until midnight Monday, August 24th. I want to give you time to mull it over. Summer weekends are for fun, so we extend this out into Monday. Or you can contact sales at chaikinanalytics.com, 877-MY-PORTFOLIO. Now, what do you get for $1,750? Well, you get to turbocharge your profits during earnings season. You get to avoid landmines, and you save $695, $200 off the price of Chaikin Analytics, and then a package of products that comes with it: market insights, daily morning insights, portfolio health check, and research reports. Normally sells for $495 a year. You also get free small group tutorials to help you understand what's in Chaikin Analytics and how to use it. And then we have subscriber-only open forums where you can call in and ask questions, and then we encourage you further to schedule one-on-one sessions with our onboarding people if you really need more hands-on guidance as to how to use the system. Now, I think Chaikin Market Insights is important. We got a shout out in the question box. Someone made a lot of money in Yelp. They're long the NetApp puts. I feel your pain. I'm long them as well. Who knows what tomorrow's bring? Maybe those puts turn profitable tomorrow. But here's an example of what you can glean from Chaikin Analytics. It's not the idea that we're recommending a bullish or a bearish stock every week. It's that we give you an insight into our thought process. So on July 26th, I made Yelp, which was $34.56, my bearish stock of the week. And the reason was it had a bearish power gauge rating, was due to report earnings 2 days later. And I looked back and I saw that when they reported their first quarter earnings in late April, the stock dropped over 20% on disappointing engagement numbers. Now, Yelp's a great company. We travel a lot for business, always looking at Yelp for restaurants and hotels. They never ask for my email address. They don't get 1 penny from me, and they don't even know who I am. It's a bad business model. So I said, buy put options on Yelp ahead of Tuesday's earnings. And this is what the chart looked like. Here's that gap down the previous time. We had just gotten a sell signal, a money flow sell, and the stock gapped down dramatically. And it was down big again today. It was down 5% today, again, making another new low. The game is not yet over for Yelp on the downside, in my view. And you've already seen the testimonial. Someone who was a recent subscriber to Chaikin said that the Yelp trade is the best success he had had in the whole year, and he'd only been a Chaikin subscriber for 2 weeks. So that's the kind of profits that you can glean by following this 5-step methodology. Now, we'd like to offer you a fast action bonus to make it even more palatable to subscribe to Chaikin Analytics. So if you subscribe by midnight tonight, we'll take an additional $100 off the price of Chaikin Analytics, the annual cost down to $1,650. And for the first 6 people who subscribe tonight, you'll get a one-on-one half-hour session with me that we schedule after you've had your onboarding. I mean, we can talk about anything you want. I won't give you specific buy and sell recommendations, but everything else is on the table. And we've had some wonderful interaction with clients, some of whom are very smart but are pursuing day trading strategies that can't work, or naked put writing strategies that are doomed to fail in a market if it breaks down. And based on 50 years of experience in Wall Street and the fact that I ran an options department for 5 years, I'm very comfortable talking about option strategies, how to use Chaikin, how to do the top-down analysis, and so forth. So ChaikinAnalytics.com/candle. The offer code is candle. Contact sales at ChaikinAnalytics.com, 877-697-6783 to take advantage of this fast action bonus. And again, for the first 6 people who subscribe tonight, direct one-on-one half-hour session with myself, or if you choose with John Schlitz. He's one of the most brilliant market technicians I've ever met. Worked with him for over 20 years, so take your pick, but I'm happy to be there. I love these one-on-one sessions. Some people charge $5,000 for a one-on-one session. We give it to you with Chaikin. I enjoy it. We're looking to build loyal customers who make money in the markets. That's why we're so comfortable with our partnership with Candlestick Forum and Steve Bigelow, because he's got the same mindset. Educate you, teach you, walk you through the minefield, help you make money in the market. So with that, I'd like to thank Becky, Steve, Jim, the whole Candlestick Forum crew for making this possible, for getting us over the technical glitch, and tell you again that if you sign up today, you'll pay only $1,650. And now you can, by the way, follow me on social media, because I also tweeted on that bearish market alert at Mark Chaikin, or on Facebook, Chaikin Power Tools. So with that, I'd like to turn this over for some Q&A, Steve, if you're still with us, or one of your people. If we've had any questions that you think would be of general interest. I'm not sure I can get my desktop app up, but I'm going to try, because we can look at individual stocks.
Okay, I can.
On the Chaikin Analytics app.
Let me zip through some of the questions on your offer. Is this a one-time fee or an annual subscription?
It's an annual subscription, but we hold the price line, so we're not going to raise that price on you next year. We'll grandfather that.
And so do you offer a prorated refund?
We do offer a prorated refund. We bill you for a quarterly rate, which is $550.
Okay.
But once you've had the onboarding, we have so few people, particularly from Candlestick, who've canceled. But we do honor a prorated refund, but we charge you for, because we invest so much in the onboarding process and educating you. We feel that's a fair balance between, a full refund policy and a partial.
Okay. Is there a time factor involved in judging performance, e.g. sector performance over a 6-month period, sub-industries and performing sectors over a 3-month period, than winning stocks in an industry with a 7-day performance? Ooh, I don't know if that's...
Well, industry group trends tend to persist. These are sort of what I call macro trends. Sector trends and industry trends are driven by bigger factors than factors that drive an individual stock. So when the healthcare sector turned bullish in July of 14, it was responding to the Affordable Care Act and Obamacare, the fact that there were more people covered under Medicare, and so a lot of the Medicare providers and the hospital stocks started to benefit big time. So industry group trends persist, if that's the question you're asking, and that doesn't mean they won't go down on a day like today. I mean, if we look at the ETFs, you'll see that they had a drawdown today. I mean, today's a big down day in the market, 2.5% in the NASDAQ, almost 3%. So if we look at the healthcare ETF, there we got the utilities, which were only down 0.5%. They're doing what they should do, which is be a safe haven. Let's say we click on healthcare. The healthcare ETF was down 2.32% today, but it's still been outperforming the market. And so group trends persist. I'm sure Steve can tell you that. He's been around almost as long as I have, and probably saw the mobile home stocks in the 70s and the the internet stocks in the late 90s, and the banks and the insurance stocks like AIG in '08. Industry group trends persist on the upside and the downside. So if you look at the casino stocks, it's not just Wynn, it's Las Vegas Sands, it's MGM. All the casino stocks are going down. And as a rule, that's the case. There's Las Vegas Sands. Here's MGM. So that's why industry group trends are so important. They put the wind at your back.
Okay, BC is pushing the envelope. He's saying, how about subscribe tonight and have a 30-minute one-on-one with you?
Oh, absolutely. Can't do it tomorrow, though, because I'm going to Florida.
Okay, BC, you got your answer. Let's see. Alex is asking, Jim, is there any way to view it again if we did not register? You'll get a link. Okay. How does one account for new biotech research products coming into the market?
Well, that's interesting. Biotech stocks, the large cap ones, Chaikin has been wonderful on. Celgene has had a bullish rating. Amgen, Biogen. One product, biotech stocks are tough because you're dependent on the FDA and second stage trial results and so forth. But here's an example of a one-stock biotech company that I actually tweeted on, and that was one of our testimonials in the second slide we put up. Here's a stock where I put out a bearish tweet the day they were due to report earnings, and I said I would sell the stock ahead of that earnings report. It's breaking down. The power gauge is bearish. The relative strength is bearish, and the money flow is bearish. And I think there was a sell signal on the stock. Now, we may have lost our connection. Can you hear me, Steve?
Yes, I can hear you.
All right, I'm trying to get a signal up here. Yeah, I can. I may have lost my internet connection here on the app.
Yeah, we're still just seeing, I'm just seeing the follow me on social media, and that's the screen that I can see. Yeah, so the screen is moving.
We'll just, the screen's not moving. We'll just answer some questions if that's okay. A few more, and then let people go on their way.
All right. Let's see. Bill is asking, when you buy an option on a Geo Dot. Should we buy in the money options, Delta 70 with at least a 30-day expiration? Bill, I think it's
Well, I love in the money. If the power gauge is bullish and relative strength is strong and you're buying call options, especially on some of these high-priced stocks that are big movers like the healthcare stocks, Aetna and Cigna and so forth, in-the-money options are obviously a way to control a lot of stock with fewer dollars and know what your risk is. You don't want to lose everything on an in-the-money. But yeah, a delta of 70, if you've gotten a relative strength buy signal, which lasts for 4 to 8 weeks, is a wonderful thing because it basically enables you to participate almost point for point in the underlying stock without having to put up all that money. So I do like in-the-money options, particularly if you have an entry point based on candlesticks or Chaikin that suggests that there's going to be a big move. And Steve has done some webinars to show you how to know that a big move is likely based on some of his other techniques. And obviously we've tried to point out that when relative strength and power gauge, the dynamic duo, are in place and you get a relative strength buy signal, that you're likely to get a move that's going to last 4 to 8 weeks. And at that point, I'd want to buy an in-the-money option.
okay. BC is asking, your relative strength is based on a 21 exponential moving average? Question mark.
No, our money flow is based on a 21-day look-back period. The relative strength sell signal or buy signal is based on crossing the 21 and then moving back down through it to get a sell or up through it to get a buy. The actual relative strength computation looks back over 6 months. So we're looking for longer-term indications that don't flip-flop, and then we apply sort of a stochastic methodology. So think of it as a stochastic of a 6-month relative strength. And that's why it doesn't flip around from bull to bear and back again very often. You can believe that when you've had a personality change like you just had in Disney, that it's going to last for a while. And that's powerful information because it tells you I can trade this stock from the downside with confidence using stops or options as a way to limit your risk and not feel like I'm on the wrong side of the market.
All right. MK is asking, what's the difference between Chaikin Power Suite Premium and the Chaikin Analytics? Any discount on Chaikin Power Suite Premium?
Well, Power Suite Premium doesn't give you the charts and the lists and the signals and the relative strength indicator. It's a combination of my weekly market letter, research reports on 5,000 stocks based on the power gauge, and a product we call Portfolio Health Check, which does a great job of analyzing a list. And you get one list. In the Chaikin Analytics, you get the full Monty, and you get access to all of that additional information. So if you go on our website, there will be a special offer for Power Suite, but you're really only seeing the tip of the iceberg if you get Power Suite. It's a great way to get started with Chaikin, but if you're a serious trader, you really want the package that incorporates the chart, the fundamentals, the signals, the list manager, which is so critical, the ability to do the top-down analysis, and so forth.
All right, I think we got most of them. Edgar, yes, the T-line is based on the 8 exponential moving average. I think we got most of it, Mark. Does the system suggest option strikes and expirations for calls/puts for the best trades?
It doesn't today, but it will within 2 months. We're partnering with a third party that does a wonderful job. They have the same sort of aesthetic that we do, slimming down the information, not forcing you to look at option chains and so forth. So right now it doesn't, but within, I'd say, 2 months it will. So learn the system now and be ready when that comes. It's not that difficult to figure out the options. When I was looking at NetApp puts, I know the earnings are coming out after the close yesterday. That's a Wednesday. It's either going to be, it's a binary event. It's going to be a big win or a loss. So the stock was trading at 30 3/4. I bought the 30 puts that were due to expire on Friday. It took me about 30 seconds to know which the right put option was. I could have bought a spread, a credit spread, by buying the 30 put and selling the 28 or the 25 put. But really, you don't have to go much beyond two simple strategies. Buy a put or a call, or do a price spread to have a little bit of a risk-reward ratio that's not all or nothing. But we will have suggested strike prices and durations coming soon.
Okay, I think we got compatible with which platforms?
Browse. It's the desktop well, we have an iPad that you can take with you. The desktop version is browser access, so it's Mac or PC. Doesn't care, and it likes Chrome the best, but it also works in Safari and IE. So any browser gets you into Chaikin Analytics for desktop.
All right, I think we got them. Everybody, what you're listening to is somebody that has probably put together the most comprehensive tool for analyzing all the indicators and building it into one program so that that you're getting a cumulative input of what's going on as far as the bulls and the bears in a stock price. So I wish I had the wherewithal years ago to put that type of program together. Once I got to 4 indicators, I got so confused I had to give it up. So
that's why we have a computer doing it, Steve.
That's right. And so it's not the fact that Mark has not only done this type of program, but this program is now kind of the standard used by a lot of the big money hedge funds and money managers around the world. So with that, Mark, thank you again for a great presentation. Everybody, if you're really serious about investing and you're going to be doing this for a living full time, this is the program you want to have in your back pocket to give you that extra bump in your trading. So with that, Mark,
Steve, thank you very
much.
Love this. Yep. Pleasure as always.
All right, great. That's right. No more money managers needed. You're the best money manager. The person's the most interested in what your money's doing is you. So with that,
amen to that.
Yep. All right, everybody. Have a good evening. We will see you in the chat rooms.